Hi, folks. Just reaching out for our cheeky little mid-month March 2021 update. Thought we'd flip the script a little bit today and talk, firstly, just a bit of a COVID update. It's obviously very topical, remains topical. So February saw the continued rollout of vaccines globally. So the US, I think, now putting on an average of 2.3 million shots, 2.4 million shots in arms a day, and then their daily infection rates down from sort of that peak of 200,000 to about 70,000 a day now, which is good. UK and Europe infections have displayed similar drops, so I haven't got the numbers on that. Locally, our rollout is clearly much slower, but we're not really contending with much virus presence here in Australia. We are producing the AstraZeneca vaccine here locally, so once that begins to roll out and roll out quickly, numbers of inoculations will happen quickly here in Australia. Locally, we've had reporting season here in Australia, so a lot of half-year results, and this is the first time that we've had full COVID-impacted reporting results here in Australia. To give you the very, very high-level numbers and nothing more, so about 140 of the ASX 200 companies have reported here in Australia, with about a bit more, I think, than 80% of those companies lodging statutory profits. So minimised impact from where we were staring down the barrel of thinking how bad it was going to be, COVID numbers. Cash rate remains 0.1%. The RBA QE program bought another $100 billion worth of bonds in the February month. Unemployment rate continues to fall, but obviously wait for the March end of JobKeeper and JobSeeker to see the full extent of that slowdown and impact. Here in the US, over in the US, Biden, 100 days in office, close to 100 days in office, showing good progress. Not hearing about him or the presidency a lot, which is sort of a bit more of a back to normal situation in terms of the US president. So I think that's a good thing. They had, in February, I think they had new jobs of around 380,000. We're forecasting about 180 or 190,000, so good numbers. 1.9 trillion of stimulus will be rolling out there. Adds to the US deficit, but has been hailed in many corners as a good thing, equally in other corners as a bad thing in terms of their debt position. However, that stimulus will impact flat and smooth markets, which will in turn obviously impact over here. From a world perspective, I think positive results from these vaccination programs that we're seeing globally, gathering momentum. That's been a good thing. Major US indices are all up at the moment. Asia, looking back on February, this is, I think Japan, Nikkei, all-time highs. Again, the one-year return up around 40%, 39.5%. Korea, 50%. I think it's worth mentioning that no world commentary is worth its weight without a comment on China. So I think in the last couple of weeks, it's the 100-year anniversary of the CCP, the Chinese Communist Party. A couple of points to come out of it. On China, they remain one of the world's most robust economies on the other side of COVID. They are continuing as part of their 14th five-year strategy, which comes out of the CCC, the Chinese Communist Party. Urbanisation remains an absolute key focus, urbanisation strategy, so moving migrant workers from farmland into the major cities. They maintain a focus on building their military might. Boats on water is a huge focus for them, coupled with their recent gains over the last 10 years in air flight. So that's a major focus for them. Carbon emissions to be maxing by about 2030. This is according to the CCP. They want to control 10% of global digital economy by 2025. And believe it or not, they versus the previous strategy, one-child policy, old China one-child policy, they want more children to combat an ageing population, which is very much a problem for many nations. Just to finish, I think bit of anecdotal information. So here with our finance, our sister finance business, Axton Finance, we've not been busier. I think another 80% clearance rate this weekend just gone for auctions. Bang on 80% clearance rate. All-time low borrowing rates. There's this push accessing super to help buy properties, which isn't a good thing, but we think it'll probably push prices up even further. We already have an affordability issue. We know that. Prices are seemingly soaring. There's that flood of metro money out to town and country. This proposed changes to this responsible lending, which understandably banks are broadly welcoming and consumer groups have voiced concern. So I think that lending, finance, house prices, surprise, surprise, here in 2021, after a long, long period of the same conversation, will continue to dominate conversations, both with my clients from a wealth perspective and financial planning and wealth advice, and also obviously for the finance business. That's about it, guys. Any questions, as always, you know where to find us, and I'll speak to you all soon.